Okay, Chris, so I'm now going to make you the presenter. Look forward to hearing your voice and seeing a screen if you've prepared anything you want to show us. So
yeah, now do you see what do you see here? I don't know what you can.
well, you have to hit the screen share option. I don't see anything. Hold on. I don't see anything yet. There we go. We got the dial up there, Chris.
Okay. Oh, right. See, I have two screens, so I'm gonna, yeah, and I have some things set up. Let me pull this over. Okay.
Okay. All right.
Is that working?
Interesting. Yeah, that's great, Chris. So really, I've looked forward to this interview. It's so nice to meet you, Chris. You know, I've was aware of you for, a couple of decades ago when you had some association with Robert Prechter. And I'd like to start the interview by telling me how you and your family enjoyed going to see the solar eclipse.
Well, in 1991, there was that huge eclipse in Baja, and I couldn't get there. I was, early. I was writing the Spiral Calendar at the time, the book, and I put, on my bucket list, see a total solar eclipse. And last week, I checked that off my bucket list. But my bucket list is not any shorter because now I've added see another total solar eclipse to my bucket list.
Okay. Where did you travel to see it in totality?
Yeah, the partial is interesting, but it's a completely different experience once that thing goes total, and just an extraordinary. And I was with my kids, which was just really elevated the experience. And we had
cool. Yeah. And they know their dad, so they know their dad's a lunatic, right?
from way back, yes.
All right. Well, so Chris, let's even go back a little further to those days, even before you started breaking out into the public scene. I read in your bio that you may have done a stint on a trading floor. How did you get involved in the business? Did you have anyone influence you? Any books that were left big impressions on you? Take us back to the beginning of your journey of how you got into the industry.
Sure. I went to art school, and like a lot of art school graduates, I was waiting on tables, and but that was generating some decent spare cash, and this was like 1980, and pennies, the penny stock Denver Oil Company thing was going on, and I was
Blind and rob 'em. I mean Blinder Robinson. Yeah. Okay.
But then yeah, exactly, Blinder Robinson, and then gold had that dramatic top in January of '80, and I thought, gee. This thing's going to go down. How do I play it? So this was my first experience with options, and I got an options account, and I bought some puts on ASA, which was the South African conglomerate, and I paid $3 for the puts, and I sold them at $6, and I thought I was brilliant, and they expired at 28.
Yeah. Okay.
And I said, gee, there must be people doing much better than I am and much smarter, and where are they? And I had a college friend who had got a job on the options exchange at San Francisco, and I went out and visited him. And I said, gee, this is for me. You walk in there and there's no windows. It's just like a casino. And
yeah.
So I started. I started at the bottom. I was a runner. I was an exchange runner, and the business was booming. I quickly became a floor broker executing public orders, and from there became a market maker. And I was standing in the pit for the crash of '87, which was such an extraordinary experience. And that then motivated my research. But I think my research has always been really rooted in what I observed in the pit, which was the emotional content of markets and seeing the emotional quality of the behavior. And I used to say that a requirement for an economics PhD is that these guys really ought to stand in a pit with their net worth at risk of a one standard deviation move, and then nobody would believe in efficient markets anymore. So that was the very beginning.
Okay, so had a similar experience. Did you hear roars when they go through critical levels? I remember being a runner, started like you did at the CME, and all the brokers were very interested in any order that had STP after it, and noticed that when those orders got elected, we'd go fast market. There'd be an audible roar on the floor, and that was at a huge amount of times the intraday high or low, because locals would sell into the buy stops and buy into the sell stops and turn the market for a little bit. Did you get those audible roars when you went through critical resistance or support level? Because it was options there. People don't trade options with stops.
Yeah, well, the equity option was a little bit different, but the same idea in the sense that the volume came in at the turns, and that was exactly, I would be anticipating a market turn, and then after the fact, I would think, well, wait a minute, how come I wasn't on top of that? Well, it got so busy, you're so busy writing tickets that, and that's invariably, yes, the volume would be on the highs and the lows, and that's still the case. I don't think that's changed even after we've all moved to trading electronically.
Yeah, now we don't hear it, but the algos are the ones that are the stop hunters looking for liquidity. So let me ask you this. For people that do not know, can you give us an explanation of what the spiral calendar is? That's yes. What you're known for.
Extremely quickly, my first observation going through 1987 was, I was fascinated with how, like many, and I know the Paul Tudor Jones people did a lot of work on this, the comparison between 87 and 29 and the two crashes. And it was curious to me that it seemed to be a calendar event. They both happened in October, but they happened on different days. October 19th, 20th in 87, it was October 29th, 1929. Well, I thought, but that's our calendar. What about other calendars? And on a lunar calendar, the crashes are on the same date. And so that was the original observation. And, subsequently we saw that Hong Kong panic in 1997. It peaked on the same lunar date as those crashes. And in 2008, when everything fell apart, the high in the VIX, that volatility measure, also fell right on that same lunar calendar point. So that was the original observation. And then the second observation was that the distance between the crash, both the distance in the crashes of 29, but also the distance from top to top, if you measured it in lunar months, is precisely the square root of a Fibonacci number. And then, so that, in a sense, the spiral calendar, what it is, it's the set of numbers where lunar months are calculated as square roots of Fibonacci numbers, which gives you a set of fixed time units which link emotional markets. And so
how does that differ from, say, Gann stuff?
Oh, well, I looked at Gann for a while. It's
complicated.
Yeah, I don't think I can really make the comparison, but okay. One of the observations in the book was that when markets get very emotional, on the upside, when we see those parabolic upside moves, you look for tops right on the new moon. And, these two Bitcoin charts that I've got up there right now are examples of that, where you just had tremendous percentage moves in parabolas. And in both cases, bam, they just go right up into the new moon, and then that's it. Okay. I've been interested in these cryptocurrencies because they seem to have a much larger emotional content, and so the spiral calendar and this type of analysis has been pretty effective, and it's not necessarily useful all the time. I think in choppy markets or emotional markets. It's really, it's a tool that you pull out when things really go nuts, when people are behaving strangely, and then you look for the relationships.
Yeah, I saw your tweet on how you said that Bitcoin is a great example for people who study TA like you for emotional behavior and irrational behavior in a market. So thank God for crypto, because everything, volatility levels everywhere else kind of dried up. So is it more typical that highs in all assets or instruments mainly happen on new moons rather than full?
Well, not all instruments, but I think it's only when things get really out of hand, when they go parabolic. I mean, so just sort of normal markets, it doesn't apply. In other words, the gold peak in 1980 was 4 days after a new moon.
Okay.
So there's another example, but just kind of I'll show. I've got some other charts of my Solunar work, which I think highlight some things.
Okay, yeah, I'd like, because wouldn't you say that the market, especially some of the FANG stocks, even though they say it's the most hated bull market in history, when I look at the chart, especially the weekly, to me it looks like we could be in a parabolic stage in the market. What are you seeing?
Well, yeah, I mean, trying to find where the high is in this, everything is so distorted because these central banks have pumped so much liquidity into it, and obviously that's feeding this crypto business. And well, let me, I want to just show you a couple of things right here on this first set of charts while we're here, just to illustrate the spiral calendar idea.
All right.
So now this chart shows, these are spiral calendar distances. So when I say F6 here, this is the sixth Fibonacci number measured in lunar months. And part of what the spiral calendar found was that new moons near new or full moons close to either eclipses or solstices and equinoxes are often the focal point of these, and they connect. But back in May we had this very sharp drop in Bitcoin, and then we had a similar relationship just a couple of weeks ago, and we somewhat mirrored it, and we had a decline. So we saw this effect come in, but at the same time this underlying trend in Bitcoin is so extraordinary it didn't break the market. That to me is one of the fascinating things. We just don't see this market break here. Well, here's one more. Now this was you can see the Fibonacci relationships here. Here's the summer solstice new moon, and then we have three tops all measure perfectly to that point, spiraling outwards, and underneath we see the Fibonacci relationships, square root of 0.382, 1.0, 1.618 from each of those. So that's a good example. Now I guess the other spiral calendar chart I have here, which is the S&P, this is the argument that we're making a potentially important top in stocks now. And just a week ago, we had this measurement both from the 2009 low and the 2000 high, and it's right to the day. The 21st Fibonacci number and the 24th. And there's the relationship. So we'll see if things break down in coming weeks. I think there's a good possibility. But as you say, some stuff still looks okay. So it's a tough call here. Yeah,
you never know how far a rubber band can stretch, right, Chris?
We know it can go farther than our accounts. That's
right. Yes, I've experimented with that. So. What comes to mind when I look at August, and you brought up the top in gold in 1980, so you must also recall that the launch of the big bull market started in August of '82. I wonder if there's any kind of symmetry that you see between the launch of a major bull and possibly at least a short-term ending of a prolific bull 25 years later?
Well, my big picture, there's a major spiral calendar anniversary of that 82 low next year, next July, but it really ought to be a bottom. And so,
okay.
so sort of, what fits with me is you get hard down 11 months or so now, and
Right.
and
And then blow off. Then blow off.
Then the big inflation gets unleashed. After following that. So
interesting. I was thinking about it. I know you cover all asset classes, and I've been thinking this in my head. Normally, almost anything in my head flies out of my mouth or on Twitter. But I've been thinking about the fact that, with what we see with a potential top here, with bonds in a retracement mode, with the dollar having pulled back dramatically, the euro rallying dramatically, that crude has been in an up move, that possibly what we get is some type of everything is bad market into that time frame, kind of a whiff of deflation, and then perhaps infrastructure, new Fed chairman, something like that is what takes us into the inflation and the end of the, big dollar decline, that there might be one more rally in the dollar going into this. So does that kind of line up with, shake everyone out of what they own, have them panic near a low, just like the housing crisis where homeowners became renters and hedge funds became landlords, shake everyone out during a whiff of deflation move across the board, and then everything is good again?
Well, yes, that fits. I mean, in a sense, I think these central banks have tried to fight the cycles. They've been trying to create inflation, for years, but they can't do it. And the reason they can't do it is because we're in the deflating cycle. And but normally in normal times, then the next progression is to a healthy growth. If you have low inflation, then that's a good cycle, and everything does well. And what I'm thinking happens is when we transition into that next phase, those economies that have been printing money like crazy, i.e. Japan and the US, or especially the US, instead of going into a healthy low inflation environment, we just skip that and head right into the runaway craziness, while any place that has been prudent in their policies would then enjoy the benefits of
you mean like China? That's been
like Asia, and all over Asia, and that just continues the progression of wealth from west to east that's been going on for a couple decades now.
Okay, interesting. Any view? Our bailiwick is currencies. Do you have any view? Are you a dollar follower, or any currency in particular that goes into your jigsaw puzzle?
I made a chart here just to sort of show some of my indicators, and it's a yen chart, so I can bring that over.
Cool.
And about 18 years ago, so I think when we start out, we all look at too many indicators, and then then ultimately we really need to find what works and narrow things down. And I really came up with 4 things, some of which I stole from other people, and but just 4 things that happen at market turns, and then program them and watch how they cluster. So this is a good example. These little crosses are RSI divergences. I developed this oscillator I call a cycle trap, which is very smooth and turns not too late. It's pretty good on getting in early. And then I use just net line reversals. When you get 3 bars moving one way, then if you penetrate that low, that's a signal. So that would be a sell there. And the 4th type of indicator is actually, there's none of them, something called a range bus bar. Some of these bars are painted red if they exceed a DeMark projected range, or they're painted green if they do it on the upside, but you get a nice reversal if you get a green and black bar at a top. That's an excellent reversal signal, or a red and white bar at a low. But you know, the dollar is very sloppy. You know, we see all these buy signals, but they're spread out, and the markets are unable to react to them. We can't even get back to resistance here on dollar yen. I mean, it's very pathetic. So, you know, I mean, the dollar's ugly, and it continues to be ugly. And I was listening to the comments before I came on. You know, I mean, don't fade this euro move. You know, exactly correct. I mean, there's these they haven't their corrections in the currencies have just been they go sideways a few days instead of, they can't make any progress in the other direction. Then that's an indication.
Corrections have been marked by time rather than Fed retraces.
Exactly. Right. You know, so I mean, you know, this is a rally to nowhere in the yen the last few days, and once that's over, it's in trouble again.
You have an oil or gold view, Chris?
Well, here this is an opportunity then to tell you another, show you some my other work. I do something called the Soluna model, which is, you know, people look at seasonal charts where you average, you know, let's say the last 20 years or last 10 years of price. Well, what I've done is with what a Soluna model is, simply a seasonal chart, but it's only averaging years where the lunar phases are the same as the current year. So in this example here, this is the Dow from 2015. The dotted line was the Soluna model for that year. Now, a typical seasonal chart will always show you the September and October is the weak month. But the Soluna model in 2015 said, hey, the weakness is going to be in the summer, not in the fall. And the blue line is how that turned out. Now, I think we've got, so here's crude oil seasonal model. And it's done pretty well this year. And it's bearish here. And I think it picks up bearishness going into the fall. But I think just a normal seasonal model shows you the same thing. You know, the fall is sort of ugly.
Back to the
metals are, I mean, longer term look very good to me, I think. They just may need to do some more sideways and basing but they look strong.
So instead of having an event risk in October, we actually could be pushing new highs into the end of the year based on your Soluna S&P chart.
Well, that was that was 2015 Soluna chart. So
I see.
Here things. Let me now. Let me make.
Okay, you got 2017 up there now. Thank you for showing them. Yeah.
Okay, so now this is very interesting. On the top clip, this dotted line, this is tidal data. So this is the tides for 2017. The blue line here is the Soluna model for past years. In other words, years where the tidal rhythms were the same as 2017. So I've circled the places where the Soluna model effectively mirrored the tides. And so then on the bottom clip, this is really a sum of that tidal data plus the Soluna data. And then here is the Dow this year. And, you know, earlier in the spring, this was completely disconnected. The interesting thing with some of this Soluna tidal lunar stuff, it really seems to synchronize in the midsummer and work really well through the fall, and then sort of falls apart. You know, springtime. I don't know, but we've synced up nicely again. So this suggests we're strong here into the end of the month, and then things roll over. But it's not looking like a specific crash here, or whatever. But I think things will be ready to head south once the calendar gets into September.
Okay. Great views, Chris. Was there anything else you wanted to show us? If not, why don't you go to your website and blog and show people where they can find you? Go ahead.
Yeah, okay, sure. I just, let me pull that up.
And it's interesting. So, you know, the moon affects the tides. So title motions would tie into your work because of that, right?
Yes, yes. And
Okay.
so, yeah, spiralcalendar.com. And I just want to say there are two things here. And this chapter 1 of the book, The Spiral Calendar, which I wrote 25 years ago. You can read the entire first chapter for free on the website.
Okay.
And then also, in 1998, I wrote a paper called Autumn Panics, a Calendar Phenomenon. And that paper won the Charles Dow Award from,
Wow.
and you could also read that paper on the website.
They give you a trophy or anything?
You know, yes, I have a nice piece of plexiglass with my name.
Oh, that, you know, let me ask you this, Chris, have you ever been to a retirement dinner for a trader? Where they get a gold watch or anything like that? That's all I have.
You know,
so
here's another chart. Now, see, here's the pure title data for that's going on right now, and so we can see, you know, high August 30th, then lower into September. So it's pretty interesting. It's fun to play with the title data. I think we've covered about everything.
Yeah, and since you study the tides, do you surf, or did you used to when you were a younger guy?
No, I'm not an athlete. I would get hurt. I've got to be very careful. I stay away from skis, anything dangerous.
Okay. One mistake business kind of stuff. But you know what? Just like great surfers, you are, but you surf the market. And what I say is, great surfers don't try and catch every wave. They wait for setups too.
Well, so, I think, you know, that's the most important thing. I think with experience is just to be patient and because, yeah, stuff comes along and you absolutely can't chase the mediocre setups, and you just wait for that thing to have them completely cornered where it's a sure thing, and they come along. There's plenty of them happen.
How many would you say in a year per instrument? Would you say four times a year, maybe?
Well, yes, that's probably about right. Now, you know, the curious thing about these cryptocurrencies, let me pull up another chart.
Oh yeah, they happen every 5 minutes.
I think, you know, here's Ether, and this was very good to me this year. And, you know, each of these green, it just formed perfect triangle after perfect triangle after perfect triangle. And, you know, the first triangle broke out at the end of February, and it was 16. And the last one happened when it was at 350 4 months later. But there were just 1, 2, 3, 4, 5, 6. There were 7 of these. And
7. That's number of completion.
They were all home runs, and you didn't have to do anything. You could wait until they broke out. And I have screen caps of some of the individuals, just triangle, A, B, C, D, E. It's perfect. Here's another one, A, B, C, D, E. That was the one at 140, A, B, C, D, E. Just bam, bam, they kept happening. And
did the high happen on a new moon up there on the first chart? Was that near?
No, it didn't. And the interesting thing with these cryptos is when they do sort of make peaks like we've seen in Bitcoin, the subsequent bear markets haven't been able to kill them. You know, I mean, this is like, it's a vampire market. And I don't think anybody knows, you know, the market penetration of these. I mean, people, if you have a mobile phone in Uganda, you can be in crypto, and the penetration of these markets might be something much larger than anybody has ever seen before. So I don't know where it goes.
Yeah, maybe it's the U.S. government's letting it happen because it's where they want to go eventually. You know, India went cashless. China's going to try national crypto, and that would eliminate the cash. You know, they'll use the excuse for, like Modi did, tax evasion, and
Yeah,
and all of that to go cashless. So instead of
but in the same sense, some of these instruments, they're outside of the government's ability to, if the concept of the central bank was an innovation of the 20th century, I mean, crypto is by definition an uncentral bank. It's the opposite, and it seems to be maybe the innovation of the 21st century.
Well, if you're paying attention to it, Chris, and you and I are pretty old school, there's something very relevant there, and it seems like everyone finally into this mania stage, which who knows where it ends, is finally grasping the advantages of it. So
well, yeah, I mean, obviously you have to be very careful, lots of risk management involved, but if you're a trader, any place where there's volume and price movement, that's the flame, and we're the moths.
Have you ever thrown market orders into any of your crypto trades?
Oh,
or
sure.
Always at the price, at the market?
On the liquid ones, yeah.
Okay. What are spreads like on Bitcoin? $10.
It really depends on the exchange. I have accounts on 3 different exchanges, so
okay.
Like the GDAX, which is part of Coinbase, that is extremely liquid, and you can get in and out of $50,000 at the market and barely move things. But then, however, say on an exchange like that, you can't short it. You can't use margin. So then something like Kraken exchange, where you actually can put on a short against a dollar position, that place is not liquid at all. I would never use a market order there.
Okay.
Poloniex is in between. Poloniex has very good liquidity, and you can short against Bitcoin collateral, but you can't short against US dollar collateral. So each exchange is different, and you sort of have to assess it, and they have different fee structures. So yeah, you can use market order someplace, but
okay.
Your mileage may vary.
Thank you so much for being with us and sharing your work, Chris. It's a pleasure and it's an honor meeting you. I've always wanted to interview you, and thank you for accepting and edifying our community today, my trading.
Well, you have a nice thing going on, so it's nice to be a part of it. I appreciate the opportunity.
Thank you very much, Chris. Maybe we could do this again. Most people are willing to return, so perhaps we could do this again down the road and see what's happening.
Yeah.
All right.
This has been fun. Thanks, Dale.
Thank you so much. Chris Carolan, you could follow him on Twitter at SpiralCal, and you can follow him on his website and read that article, www.spiralcalendar.com. Thank you, viewers from investing.com. Thank you, F.A.C.E. See everyone for Turnaround Tuesday. Good hunting the rest of the day. And most of all, remember, don't just count your pips, count your blessings. Adios.